We're going to do some top-down analysis to start today. We're going to walk through some trading opportunities. We're going to try to build on and practically apply the stuff that we talked about over the last 2 days. I am going to show you some other stuff. I am going to break down the markets the exact way that I would. So you may see stuff on the RSI. You may see some AB equals CDs, Fibonacci, stuff like that. We're going to treat this kind of like our live trading room. So feel free to ask questions. I'm going to try and take it slow. I am going to try to address all the questions and just give you a good idea of what top-down analysis looks like. All right, does that sound like a plan? Give me a yes. All right, so for those who are following along, we're going to start off on the Euro Dollar Daily. This was a trading opportunity I looked at this past weekend, and it's following through pretty nice. And this is going to be a counter trend trading opportunity. So I'm going to look for a potential reversal. And there's a 4-step process I like to go through in my trading called IPDE. Identify, predict, decide, execute. Now, if you are new, right, we talked about manuals and whatnot. This is going to be a game-changing process for you, right? You'll learn very quickly, right? Trading is all about being systematic. It's all about processes and plans and doing things consistently, right? Consistent analysis plus consistent execution equals consistent results. If you are consistent in the way you look and analyze and progress through the markets, you have the best opportunity of exploiting your trade plan or following your trade plan, which will extract market or profits from the market. So the first thing I always want to do, and we talked about this yesterday in the higher time frame, is I want to identify what is the market doing, what has the market done, where is the market at. So let's do this together. What is the market doing, guys, or what has the market done? Look to the right-hand side of your screen. What has the market recently done? Would anyone say move bearish, perhaps? I'll zoom in a little bit for you guys that can't see. Downtrend. Oh, yeah. Okay. You seen a little 3-point move there? Oh, wrong tool. I like it. Someone was paying attention yesterday, guys. Someone was paying attention. So a bearish move, we would all agree. Okay, so the market has moved bearish, right? The market has moved down. Now, have we moved down to any significant level, or are we in the middle of no man's land? All we're trying to do is we're on top of that mountain of money from being a real trading mofo, right? Looking down at the market and observing. What is the lay of the land? Well, one trick to see where you're at, right? My mentor taught me this. This is probably not the best thing he's taught me, but the most catchy thing. And it's cool because you got the signs all over in London that say it. Look left. Structure leaves clues. Or if you're in London, look left. Car's coming. Or if you're on me, driving on the wrong side of the road because I can't adapt and I'm such a stubborn American that I'm not going to change, look left because there's this crazy guy driving on the wrong side of the road. I remember a funny story. Last time I was out there, I got the rental car. And I never get insurance on rental cars because I don't believe in it. It's just wasted money. I remember I went to the guy in Enterprise. I'm like, look, give me all the coverage. Whatever coverage you have, I want all of it. Because this car is not coming back in one piece. Serious. I said, look, I'm going to hit everything. I got stuck in a roundabout for like 30 minutes. Oh, so many stories. Never going back. Horrible. So one thing I like to do, one of my favorite tools for looking left is the horizontal line tool, right? And what I like to do is I just like to use a horizontal line tool. Oh, I want that off. There we go. I want to use my horizontal line tool. I want to draw it right where price has gone to. And I want to look left. And I want to ask myself, are we at a significant level? So what would you guys say? Adrian says no. Daniel says yes. It's 1-1. Who's going to break the tie? Chris says yes. That's 2. 2-1. David, 3-1. Kevin, no. 3-2. Ali, 42, Tushar, sorry. So yes, we are at a significant level, right? If we look left, we look at the ebbs and flows of the market. We are at a previous level of consolidation. If I take the high right here and the low right here, we are trading at a previous level of consolidation. So yes, we are at a significant level. So at this point right now, when I look at the chart, I'm starting to determine which direction I'm interested in and which direction I'm not interested in. So I can tell you right now that I don't really have any interest in shorts, right? Because we are at a previous level of structure. I don't want to get short while we're at previous levels of structure. I want to get short until we get to previous levels of structure. I can tell that I would be interested in longs because as a counter trend trader, we're looking for moves at previous levels of structure. So I'm already breaking down, trying to determine what side of the market I want to be interested in. That way, I can invest all my energy in finding opportunities of how to get involved in that direction. Instead of splitting my energy and saying, hey, 50% of my energy is going to be looking for longs, 50% of my energy is going to be looking for shorts, and I'm kind of doing everything kind of half pregnant again. I want to go all in on a direction. And I'm not guessing a direction. I'm not throwing darts at the wall, right? I'm using my analysis. Could even call it previous resistance. It would be, at one point, previous resistance left, now previous support because it's at the bottom, but just call it structure. Resistance, support, or support resistance, doesn't matter. Structure, it's all the same thing, right? So now I want to build my case for entry. I want to ask myself, okay, well, it's cool. We're at structure. We've got a nice candle forming, as some of you guys pointed out already. Is there anything else in this level that gives it a clue that this may be a reversal point, right? Structure is okay. For me, it's the most important thing. Is there anything else? So is there anything else you guys see on the chart, or is there anything else that I can do to what we call build a case for entry? All right. Chris says the RSI. What about the RSI, Chris? RSI is oversold. So for you guys that are unfamiliar, the RSI is the relative strength index. This is the indicator, the squiggly wiggly at the bottom of my chart. It is oversold. Now I have my oversold set a little bit differently than the default settings. Your default on most platforms is going to be 30 and 70 for overbought and oversold. 30 being oversold, 70 being overbought. I actually put them at 80 and 20 because I want to look for very extreme overbought and oversold conditions. Now, just a brief thing on indicators. Here's a tip you can take home with you. It's a freebie, right? Typically, the default setting for whatever indicator you use is not going to be the best setting. I'm going to repeat that. Typically, the default setting for whatever indicator you put on your chart is not going to be the best setting. Now, who here is either using indicators or interested in using indicators? Here's my advice for anyone using indicators. One, you don't want to have a Jason Greystone chart where it looks like a fancy piece of artwork, right? You only need a handful of indicators. And each of your indicators needs to have a purpose. You don't need 4 different indicators for entries. You can have an entry indicator, you can have an exit indicator, you can have a confirmation indicator. 2, if you're going to use an indicator, make sure you know what that indicator tells you and make sure you know how to read it. Many people use indicators the wrong way. For example, a lot of people think the RSI is a reversal indicator. I've had people that called the RSI the reversal strategy indicator, right? It is a momentum indicator. It measures strength. The further we push past an overbought or oversold territory means the market is strongest in that direction.